All right, I'm going to do a quick update on the stocks tonight, just to keep everybody posted here. Look at a few different time frames as far as what I'm looking at. On a monthly chart, this is the S&P 500. The stochastics is coming down out of overbought territory, and it is currently in a sell signal, but without much downside strength or momentum. But longer term, that may indicate that the trend is beginning to turn down here. So on the lower time frames like the daily or the weekly, you would want to ignore oversold signals and take overbought signals. Doesn't mean you necessarily have to completely ignore oversold signals, but your better bet would be to enter trade short at the overbought signal and then exit as they get oversold. On a weekly time frame, this is the S&P 500, and this has a shorter time frame, 5-period stochastic setting, which will tend to catch the tops of rebounds in downtrends or bear markets pretty well. Historically, they tend to average 4 to 6 weeks, so a 5-period stochastics is pretty effective. That is overbought as of this past week. So, and then we did see the week close slightly lower, and the fast line start to turn down there. So this week we could potentially see a bearish cross down on that 5-period stochastic. And then on a daily time frame, let's look at the Russell 2000 here. On the daily time frame, the market is definitely overbought. The Russell 2000 has crossed into a sell signal as of Friday. It's the strongest of the major indexes there. Not really a bearish divergence here, but if you let me just click down to the Dow on a 2-hour chart and look at the MACD, you can see between this high and this high there is actually a bearish divergence on the MACD. So you know, this move up here may be completing, at least set the stage for a correction of this advance here, even if the market were to move higher. And then on an hourly time frame, this is the SPY ETF. The stochastics is oversold right now. The gap down from Friday may have indicated this upward move is complete. I don't know that we'll necessarily see the stochastics rebound back up into overbought territory before this move continues. That would be ideal, but if a pattern's complete, oftentimes the move to follow will be very, very sharp with no significant rebounds in it that would give you that type of signal. So really my plan here is if the low from Friday is exceeded on the downside, view that as a short sell signal with a stop up above this level. So hopefully that puts these in context. As far as from a pattern standpoint, I have a pattern labeled here which is based off of the price logic, and depending on what happens here is going to give us information on whether a pattern has completed or not. What I'm looking to see is whether this move up over the last week or so gets completely retraced in less time than it took to form. And if it does do that, then that would indicate the trend has shifted to down. Now, from a traditional Elliott wave perspective, I think you could look at this pattern as a 1, 2, 3, 4, 5 wave down off of the April highs, and then an ABC up with the C either just having completed or possibly needs another slight push up to finish the pattern off there. That pattern would indicate likely a large move down, probably at least as large as this move or larger. You know, we'll have to see, but the pattern is pretty nice looking from that standpoint. On an objective basis, if you look at here's the Dow. From the Dow actually made a new high on May 1st, whereas the other indexes did not relative to the April 2nd high. And so the Dow declined from May 2nd to June 4th down there, and that time from high to low has now elapsed, coming back up, and the market has not retraced above that high. So just from a logic standpoint, it indicates that the downward momentum is stronger than the upward momentum here. So I still view the power of this trend at this point as down, and then with the divergence showing up here, you know, bearish divergence on these recent highs, I would be looking for the market to possibly continue the downtrend from these levels. So Hopefully this helps. This week I think should be informative on what may happen. If a pattern is complete here, I think this week we'll see the market back below these levels from June 28th on the indexes there. So that'll give us some initial confirmation that upwards pattern is complete. I'll try and update with a video if that happens, so we can stay on top of the potential move. Could be looking at very large moves if a pattern is completing here. From Elliott wave standpoint, we could be looking at either a wave 3 or a wave C down, which would typically be approximately 1.618 minimum times as large as this move down here, so that'd be a pretty healthy move. It's also possible that the entire bull market up from the 2009 lows is from a price logic standpoint completing here at these levels, and we could see a sharp move back down below the October lows much faster than that rally took to form. So that's all for this update. I'll try and update some other markets here as well, either this week or this coming weekend. Have a great week.